Just now, and he's joining us slightly late today because I'm sure Vikas must be telling his dealers that markets are down buy right now. No wonder, Vikas, markets have recovered. No, I'm saying that you have joined us late. I'm assuming that you must be telling your dealers to buy the fall today, and no wonder after you're buying, markets have recovered.
I wish I had so much money that I could recover the market, but yes, nevertheless, I will believe what you say.
Because there is a long list of what has gone wrong, what will go wrong. My question is that why should one not why should one not sell, and why should one not panic right now?
Very good question. I think, I feel it's a very, very good question you asked. I think very simple that right now we are seeing worries to be all around, fear all around, panic all around. And to a great extent, things are, there's a merit in all of this thing. But things which are relevant for US, may not be relevant for India. In a shorter term, yes, of course, markets drive sentiments across the globe, and you will see implications happening even in Indian economics, Indian markets specifically, in a shorter term. But if you look at US is sitting on 8% high inflation, their usual inflation is 0%. India is on 6-7% inflation, our usual inflation is 4-5%, right? Our US interest rates, in US housing rates are around 5.5%. In India, we are at 7%, right? Historically, today US is sitting on all-time high balance sheet. In India, our leverage is hardly anything, whether it is a company level, country level, or government level. So I think the dynamics of both markets are very, very different. Of course, when US is of course harbinger of everything. When something happens in US, it has implication all over the world, and that is what we are sort of feeling at this point in time. But if you look at, overlook what can happen over the next 3 to 6 months, Fed will increase interest rate by 75 basis point, 100 basis point. They will pull out balance sheet. But US or Fed has to worry about how to control their damage, how to have a soft landing. They also don't want to create a sort of a crisis kind of situation. So I'm sure while markets are expecting very big impact, but there will be some sort of countering which will be done within US, so that there is a bit of a sort of soft landing, if at all it's possible, right? My point is that from India's perspective, we are very differently positioned this time around as compared to last Fed cycle. Last, when Fed started raising interest rates, our current account deficit was 4% of GDP. Our entire domestic flows was not as strong as we have today. Despite, I think, such a large outflow from Indian markets, we have been still holding on. That shows the robustness of the local money which is there, right? Which was not the case last time around, right? So, and our investment cycle has begun. Our banking system is far more better placed. Manufacturing as a trigger, which was not there this time around, is there. So I think if you combine a lot of those factors, in my opinion, India's structural growth story is the best in the world. I don't think any other market which kind of offers this kind of growth story. Now, in a shorter term, all these things will be questioned when this kind of fear and panic is there around. But in a medium to long term, we are all seeing that in the middle of the fear and panic only lies the opportunity. Like I don't think in the middle of March 2020, April, May, June, anybody could see any positive coming through. All negative was all around. And I'm not saying when I'm saying that the markets are bottomed out, markets cannot go down. All I'm saying is that large part of the damage is done. I don't see a situation where markets can sell off in a major big way from here on, given what the developments which are happening. And another thing which I tell you, markets always sell off when there's a big shock value, and which is partly we have seen right now, right? Currently, leverage position in the markets are low. I think expectation of the worst is probably more. And if those kind of things happen, I personally feel that the sharp cuts are very hard to combine in this kind of situation. So panic doesn't happen when you expect panic. Panic happens when you don't expect panic, and which is what has partly played out right now. So I do think that in the next 3 to 6 months, and like we discussed in our last conversation also, next 3 to 6 months would be a great portfolio of interest to build, because long-term fundamental stories don't change. It remains as strong as it was before. Yes, short-term demand disruption short-term growth slowdown can happen for a couple of quarters. Yes, it will happen. There's no doubt on that. But when you are looking to value equities from a terminal value perspective, long-term growth perspective, few quarters of slowdown can be adjusted, and that has been partly factored in the pricing as well.
Because as risk unwinds, and we've seen how when the deleveraging starts, everything just gets hit. It's happened in the past, it's happening in the crypto world, it is happening in emerging market currencies. You don't know, markets fall 10%, they may fall 15%, and individual stocks may fall 15% or even 25%. So if the world is not deleveraged, and we know that in the short term compulsions are at play, so then how does one prepare? Because it's very disappointing, it's very overwhelming to see that for most of the investors, the COVID gains have gone.
No, absolutely. See, again, like I said, the point I'm making again, I don't think COVID gains would have gone, but people who invested into 21, definitely, I think those gains have gone, and some amount of bleed probably also would be happening. But like I said, if somebody invested into 20, I think still he would be sitting in pretty much decent amount of gain according to me. So investing, vintage decides, reasonably part amount of your return. I mean, if you are buying among the fear and panic, you do come out well over a medium to long-term perspective. But your point is valid that in times like this, there is no point in being very brave and say that things have kind of bottomed out and should start. Things are still yet to pan out. We have to see how far interest rates raising cycle in US can go. Energy prices, where will it settle down? So rather than just being a contrarian out here, I think next 3 to 6 months would decide how, and let's wait for the situation to settle down and then buy and then do it. If you are fully invested, I would not again say that you should panic out and sell and create cash in a big way. I don't think that is a wise idea or smart idea. If you are sitting on dry powder, again take your time over next few months to deploy. Don't be in a hurry. Don't be in a rush. But I don't see a situation why one should kind of sell off and go.
Okay, so you need to panic and raise cash. If you've got cash, you can sit on it. That's the word that's coming in from Vikas Khemani. Now, Vikas Khemani, somebody does want to deploy cash, and if your clients are saying that we want to buy into the fear, where is it that you are seeing pockets of opportunities? You've been, of course, talking about banking and auto for a while now.
Yes, I think don't change. I think banking, in my opinion, again, is a very good opportunity. Once the fear settles down, you will see it doing very, very well. And again, mild interest rate rise helps them. And we are just beginning to see credit picking up. So banking looks pretty very good. Automobiles, there's a good trade which is building in, especially from a recovery of volume perspective. We know that because of semiconductor chip shortage, right now demand the growth has been muted. But I think 23 could be a very good year from that perspective. Manufacturing side, we've been continue to remain bullish, and many stocks and sub-segments have corrected 25-30%, or maybe some even more. There could be interesting opportunities to look at. Even within IT, I feel that pockets of opportunities are very, very strong. Stocks have corrected and come into mid-teens to high teens kind of valuations, and growth environment has not ebbed yet. Based on whatever commentary we have seen, companies are saying that this is non-discretionary demand. It's likely to continue even if US were to slow down. So again, a sector like that, according to me, offers a reasonably good cushion in the portfolio. So I think all those things don't change, and I again reiterate that I remain very, very positive from a medium-term to long-term perspective. We have to navigate next 3 to 6 months in an uncertain environment, and that's what one has to be very, very careful. Leverage should be avoided, but one should not panic.
While one should not panic, should not lever either, that's the advice coming in from you. I wanted to ask you, have you used the recent dips, the recent correction to buy into stocks? The last time you told us was about JK Paper, if I'm not mistaken.
That was a while ago, but we keep looking for ideas. There's no question on that. We have right now also, while we are sitting on some amount of cash in one of the sort of schemes, and so we will deploy. We are still not deployed. We are just kind of waiting, sort of things to settle down, a little bit clarity to emerge. Like I was saying, that it's better to wait for a little bit clarity to emerge rather than being contrarian and brave at this point in time, as things are going to be fragile in some, at least next few months. So we will buy in dip at some point in time. We are ready with our sort of thought processes, ideas. But that time, in my opinion, still, because we are still, sort of 85%, 90% invested. So if it rebounds, we will definitely capture the rebound. But deploy part, we are right now still holding on. We will do, in due course over next few months.
Because don't you wish it was a longer trip to the Everest and you would have missed all of this that's happening?
Yes, always. It's always, I wish in January I sold everything and went for a 1 year holiday, but that never happens in life, right?
Yeah, that would be a utopian life, wouldn't it? But Vikas, always good having you on the show. Good chatting with you.
Thank you very much, and it's always
Thanks.
good to be with
Bye.
you.
Okay.